you ever get that feeling that something weird is going on just beneath the surface? Listen to this. Some crazy creeps on an island somewhere are secretly running the world.
And then there's this little piece of advice. One activity you might enjoy is not asking questions.
It all kind of makes you want to say, I'd like to report a really weird island.
Okay, so what was all that about? Well, those strange clips, they all capture a certain feeling, don't they? A feeling that things just don't quite make sense. And that is exactly what we're going to dig into today in our explainer on the Great Banana Bubble.
Yep, you heard that right. We're going to tackle one of the most confusing and honestly dangerous ideas in finance. And we're going to do it using something we can all understand. Something simple, delicious, and for our story today, incredibly valuable. Bananas.
So, first things first, we got to start with a baseline. Reality. In a normal world, a banana has what economists call intrinsic value. That's just a fancy way of saying its price is based on what it's actually for. You buy a banana for one leaf, that's our money here. You eat it. End of story. Life is good. Simple, right? Well, things are about to get weird. It all starts with a little whisper, a rumor. Hey, have you heard? Bananas are getting rare. And just like that, bam, the price jumps. Suddenly, monkeys aren't buying bananas to eat them anymore. Oh no, they're buying them because they think they can sell them to another monkey for more leaves tomorrow. And before you know it, the price just skyrockets from 1 leaf to 20. And that, my friends, is the textbook definition of a financial bubble. It's that moment when the price of something, in our case, a banana, totally disconnects from its real, actual value. The price isn't about food anymore. It's all about speculation. So, what's powering this whole crazy train? Well, the first ingredient is pure human, or monkey, psychology. FOMO, the fear of missing out. Monkeys look over at their neighbors getting rich off bananas and they think, whoa, I've got to get in on this, or I'm going to be left in the dust.
And that leads directly to the second ingredient, herd behavior. Look, when every single monkey you know is buying bananas, it just feels like the right thing to do, doesn't it? It feels safe. Even if there's this tiny voice in the back of your head going, wait, aren't these just bananas? The pull of the crowd is just too strong.
Our source material from this study called Primate Economics just nails it. There's no big, complicated analysis going on here. It's really simple. Basically, monkeys see, monkeys do. Now here's where it gets really nuts. This whole thing creates this powerful, self-reinforcing loop. It feeds on itself. The more monkeys buy, the higher the price goes. And the higher the price goes, the more other monkeys feel like they absolutely have to buy in. When you're inside the bubble, it really feels like it can only go up. But if you want to take a bubble and inflate it to truly epic, world-ending proportions, you need rocket fuel. And as our source puts it so brilliantly, if banana hype is the bubble, cheap loans are King Kong with an air pump. This is where things get really dangerous. All right, let's break this down. Let's say you do a normal investment. You use 100 of your own leaves to buy bananas. If the price goes up 10%, hey, you made a 10% gain. Awesome. If it goes down 10%, you've got a 10% loss. It's a one-to-one thing. It's simple, it's straightforward. But now, let's add what's called leverage. Let's say you only put in 10 of your own leaves and you borrow the other 90 from the monkey bank. Now check this out. If the banana price goes up by just 10%, you've just doubled your own money. That's a 100% gain. But, and this is a huge but, look at the other side. If the price goes down by just 10%, your original 10 leaves are completely gone. Poof, a 100% loss. So this is the part that everyone needs to understand. With leverage, the market doesn't even need to crash. It just has to wiggle a little bit. A tiny little dip in the price is all it takes to completely wipe you out. This is the hidden danger that turns a little bit of craziness into a total catastrophe.
So thanks to all that FOMO, all that herd behavior, and all that borrowed money, the price of a single banana hits an absolutely insane peak, 100 leaves, a price that has completely and totally left reality behind.
And then, at the very peak of the madness, someone finally asks the simple, obvious question that everybody just forgot. Wait a second, what are bananas really for?
And with that one little question, it's like the spell is broken. The music stops. Monkeys remember, oh right, bananas aren't just numbers on a screen, they're food. And you can't eat a 100-leaf banana. That perfect confidence that held the whole thing up, it starts to crack, and the panic begins. And here's the thing about bubbles. The fall is always so much faster than the rise. What took months to build up can collapse in just a few days, sometimes even a few hours. The price just plummets, from 100 leaves down to 50, blowing past 20, all the way back to where this whole crazy thing started, one single leaf.
And remember, leverage, our King Kong with the air pump? Well, guess what? It works on the way down too, only in reverse. When the price starts to dip, the banks get nervous and they call in their loans. To pay them back, monkeys have to sell their bananas, which, of course, pushes the price down even further, which forces more selling. It's a horrifying death spiral.
Now, when the dust finally settles, it's really important to remember that not everyone loses. The winners, they're the ones who got in early and, this is the crucial part, they got out before the pop. And, of course, the monkeys who just sat it out and watched the chaos from the sidelines. The losers, well, they're the ones who jumped in at the top, driven by FOMO, especially the ones who used borrowed money. They didn't just lose, they got completely wiped out.
So, how can you spot one of these things in the real world? How do you protect yourself? Well, our source gives us some pretty clear red flags to watch out for. When your neighbor, who knows nothing about investing, is suddenly bragging about their huge profits, be careful. When it seems like everyone is borrowing money to pile into the exact same thing, be careful. When you start hearing phrases like, this time is different, or the price can only go up, be really careful. And when the price just makes 0 cents for what the item is actually used for, yeah, you get the idea.
And that brings us, of course, to today. The source material leaves us with a pretty provocative question, using this same analogy. We see companies that look like business geniuses, but when you look under the hood, they still don't make any leaves of their own. So it asks, could all the excitement we're seeing around AI be the next great banana bubble in the making?
Ultimately, the lesson from our banana trading friends is a simple one, and it's timeless. No matter what everyone else is doing, always try to remember what something is actually for. What is its real fundamental value? Because at the end of the day, no matter what the price tag says, bananas are for eating. Don't fall for the hype.